Alrighty, what's happening, everybody? Happy Monday. We're going to go into this real estate brokerage model today, try and get down to cash flow, maybe add some income statement, financial, balance sheet, cash flow statement. Um, I'm liking the new schedule. I think I was getting too burnt out going Monday through Friday with all the other stuff going on, but Monday, Tuesday is pretty good. So let's get our links out here to Twitter. Sounds working. That's good. Don't forget to check out more financial models, templates, and tools from SmartHelping.com. I've got uh, all kinds of build SaaS models, real estate underwriting tools, industry-specific models, joint venture distribution waterfalls, accounting tools, human resource tools, personal finance stuff, more Google Sheet architectures, CRM stuff, valuation stuff. So you can buy it in bundle, individually. You can get everything I've ever built and ever will build for $9.99. It's lifetime access to everything. And check it out. All right. Now today, real estate brokerage, which will be included in the real estate bundle when it's finished. And let's turn this thing on here. And let's remove this. And get the chat there. So happy Monday. Uh, hope everyone had a great weekend. Um, I've been working on all kinds of different stuff, distribution, template distribution work, which is very tedious. Um, but happy to get back into it. So this model is pretty cool. You can do, so right now we've set up the revenue assumptions for, we're simply assuming one type of average deal, the total deals per month per agent, expected number of deals completed per month from agents. So that's going to drive your volumes. And then there's a bunch of different percentages to figure out the average commission on the sale, how much of that the brokerage is getting when they're on the sell side, how much they're getting on the buy side, or how many deals are on the buy side versus sell side, how much they're getting on the buy side and sell side, and how much the brokerage is getting versus the agents. And then this is the same exact thing down here, except if you wanted, this could be the firm itself, like the partners doing their own deals, and in that case, they would get 100% of the split or whatever. So you can define those here. And I've put this into a 10-year model for revenue, and that's where we left off. So let's continue on down here. So commission share for brokerage. So this is all the revenue that there will be. So we can put down here, total brokerage revenues is just this, and we are going to put some metrics for how much the average agent is making, and I think that's good to see different scale factors. Let's see, drag this over. So this is total brokerage revenue, and then what I can do is, let's see, where do we calculate deals per month? We need to calculate how many agents there are and how much. So we'll do, where do we want to put this metric? Guess we can go down here and put agent economics, and we can say total, oh, come on, total agent count, total commissions for agents, and average monthly earnings per agent. So that's going to be good to figure out when you see all your other assumptions and kind of gauge what kind of sense you're making. Also, we're going to have variable costs per agent. So we need to know that count for that as well. Let's see, I put in some, let me look at these assumptions. Yep. Oh yeah. So we're gonna have the option to offer marketing, transaction management, which are let's see. Yeah, those are variable costs for the brokerage. Okay. So total agent count. How do we figure this out? Well, we have expected number of deals completed per month from agents, and we take this number, and that's going to be a ratio with the total deals per month. So we have up here, we'll have to put total agents. Now this is just a division problem. We say if there's 10 deals, it'll be whatever deals per month here divided by the input here, average deals completed per month per agent. Now this is not going over time. This is just a static input one time. So here when you get to 20, it should say 2. Yep, that makes sense. Decimals are completely fine with financial forecasting. Don't be afraid of decimals. So here, if you did 100 deals, each agent does 10. Well, that's about 10 agents you have. And I kind of want to separate this. Okay, and let's do same thing here. And again, we're separating these into two types. So we have a separate deals per month for these types of deals and the amount of deals the agents do in that one. Now this could be let's think about this because this is potentially where there are no agents and it's just a firm, and in that case there would be no cost. There would be no cost per agent because it'd be the brokerage itself. But I guess you could be spending marketing on your own activity, so I guess that's fine. Average deals done per month per agent. Oh, hold on. Expect number of deals completed per month from agents. This is the total, and this is a growth, and then this is actually, so we did split this off into 10 years, which is fine. Okay, so this needs to be an index formula because this is the ratio that defines. Got it, so that's why this is 0 because there's technically no agents here. Okay, so row 10, this has actually got to be an index formula, not a reference directly to that cell. So index this. And I guess that would mean you're planning on, either getting better over time or your agents are more efficient, or on average, an average agent will do more deals over time, is what this is saying. Potentially, or less, depending on how you change this. Like if I put 4, 5, like that, so an average agent is doing more, then actually you're going to have less agents, well, depending on how many deals you're doing. Let's see what that looks like. So here we start with 2 deals a month. So, or an agent can do 2 deals a month. So if there's 10 deals, there's 5 agents. And then we end up, so it's slowly going up because the amount of deals per month are growing, but we're also adjusting. See, it goes up here and then down in year 2 because we're saying in year 2, an average agent will do 4 deals a month. Let's just stick it at 2 for now, but that is a nice variable to have. Okay. The only real point of having that is, one, to see the unit economics of an agent, like how much commission are your agents making, does that make sense? As well as the variable cost per agent. All right, we'll copy this down to here. And on this, we just need to change our index. This is 4 and to 27. Oh wait, oh wow, that's exactly the right amount of length. So here we're saying there's no agents. That makes sense now because potentially these are the firm. It's not going to drive or impact the cash flow beyond variable expenses. So whatever these numbers are here. So now I can say total agent count is this plus this. Total commission for agents would be, we have it broken out already and calculated, this plus this. And I'm really glad I did all this last week because there is a lot of nuance to these commission percentages. I'm glad that's done. Plus this, plus this. All right, so we got our commission for all the agents. We have the total existing agents, and then from that, we can calculate average monthly earnings per agent. It's just 1 divided by the other. Oh, I also wanted to adjust all of the formatting for all the numbers in the whole model. So I'm going to show you that in a second. Let's just drag this out first. Okay, so I actually want to change. Let's start here with any number values. So this is going to be a number value, this, that, that. Okay, I want to change. I don't want it to be a currency, and so this helps it be global. Is we just want no $sign, but we want it to look like this. And then you could say up here, we're going to put this over to the left and you can put values in USD. Actually, there's too many different types of values here. Undo this. We'll keep that like it is. But here, so these are percentages. We want it to be this custom formatting. Or if it's 0, it's just a line dash like that, or it's a value with no symbol, and then you could put here, you could change it to whatever your currency is, but here I'll put value in USD. I can't just put that up here because there's all kinds of percentages and number values that aren't USD, so we have to actually label these two. It makes more sense just to label it like that. Now on the other parts, so on like this, we can say values in USD or whatever. Whoop. Let's see, where do I want to put this? Okay, so then we could do all of this here. There we go. So it's a little bit less cluttered, a little bit cleaner. I like that style, so that's how that's going to be. Value in USD up here, and I guess we could put, I don't know if we need to put if otherwise specified, because deals per month is obviously not a USD value. Agent count is not. Yeah, that's fine. That's fine. Okay, so total brokerage revenues we have coming down here. And now we need to start building in our variable expenses. Actually, let's just call this cost assumptions. And we'll bring in, let me get a different template. So it'll look something like this. Now we are, I think, doing, is this 10-year? Check. Yeah, 10 years. Okay, so we could extend this out. Also, this font's got to change. Now we can keep all of, oh, merge. Cost of, okay, this, keep this. One, two, three, four, five. Dang it. What is this? Nope, that's not relevant for this model. We'll keep that note. That's a good note to have. One, two, three, four, five. Oh my goodness. Get up there. Ah. Okay. Okay. Now can we drag it over here? One, two, three, four, five. Nice. There we go. This is not relevant. This is not relevant for this. All right, we have a fixed cost schedule. We also need to do some variable costs. So let's extend this out here. This is going to be equal to the first month. That's fine. That's good. Okay. Cost detail is there. Might need to zoom out a little bit so we can see. So for brokerage, there's going to be regular fixed expenses like any business. You can pick the type, what the expense is called, the start month, and the monthly cost in each year. We'll put values in USD, and again, that could be different, whatever currency, but we'll do our new formatting here. Okay, now these are percentages. So we have fixed monthly costs in each year. To start month, all of these need to be going through data validation. Okay, did that work? Nice. Yeah, it did. Now 2023 is our start month. We'll adjust that so these values make sense. Now the reason why I do put values in the models when I'm building it is it's a very easy way and good way to check to make sure the logic is flowing through. Let's make this font a little bit smaller. So what we're saying here in this little note is essentially any item that's a salary item is considered fully loaded. So you need to include payroll taxes and benefits in that total cost if it's a salary item. Okay, so we have fixed costs, we have some variable costs as a percentage of revenue. We also need to put in our other variable costs per agent. And before I get into that, what else was I going to do? I had something I wanted to do. Um, let's think. What was I going to do? So we have this. This should be up here. Oh, got it. Okay, I actually need to check if in a real estate brokerage they pay payroll taxes and benefits to the actual agents. Do agents get payroll taxes and benefits or just the commissions in a brokerage? Yeah, because that's kind of important to know because the agents are going to be scaling. Those are headcounts that scale, so we have to check what's going on with that. So while real estate brokerages don't hire employees, well, you're gonna have some employees like managers and stuff if you get big, but most people don't realize that brokerages rarely hire as employees, which means they have no salary or stable income. Okay, good to know. So basically, the answer is no. So if you're a real estate agent, you're considered an independent contractor. That's just like what I do with these financial models and stuff. So you have to pay the full self-employment tax, payroll tax, or which is basically Social Security and Medicare. You have to pay the full amount as the agent yourself. The real estate brokerage will not be paying that in most cases. Now, a W-2 employee would be like somebody who's doing admin work for the brokerage, a manager. Those people would be getting that paid for. So that's good to know. I figured that. I just wanted to double check. Okay, so the agents, they're just getting the commissions. They're not getting benefits. Now, commission share here. So here we got 5 agents, total commissions. So our assumptions are not bad here. I mean, the average agent earning $30,000 a month based on these revenue assumptions, average deal size, total deals done per agent per month, and then the total deals that are happening over time across the whole entire brokerage. Now, these are arbitrary. It depends on what assumptions you put in here, but this is what I've put in just as arbitrary numbers. Uh, there's probably too many deals happening here. Let's put this down to like 15. Actually, that barely even affected the amounts. Oh, that's right, because deal type 2, we're basically saying there are no agents. So that there would be no effect there. Okay, that's fine. Um, so let's do variable costs now. We'll put these down here. We can structure kind of like this. 2 variable costs per agent per month. So you can do the start month that these costs begin, what they are. So I could put, marketing, monthly marketing, transaction fee. What do we call this? Transaction management. Oop. So the brokerage is going to help the agents out with some costs and some marketing, maybe um, other costs. So I did up to 5 slots here. That's probably more than enough. And then we'll do the same kind of formatting on this. So per month, you're spending. Now we can put, since there's 2 different types of agents, potentially, or these might be no agents, but if they are, you want granulation between how much are you giving these agents per month for marketing and stuff versus how much are these agents getting per marketing and transaction management, which could be possibly different. So we'll do 2 types of variable costs here for these guys. Oh wait, extend this out. So I can say variable costs per agent, deal type 1 and deal type 2. Now, I don't really have labels for these sections. We can probably put that in here, such as deal type 1 configuration. I'll just give this like a black border. And deal type 2 configuration. And all these can just be indented a little bit. Okay. I don't know if I like the black. Maybe a little bit lighter gray. Okay, so that's good. Now, so we have these variable costs per agent. Variable cost per agent. This is per month. Okay. And I mean, $7,500 might be high. It depends on what the deals are you're getting, but let's put this maybe down to maybe $500 for marketing per month. And you could scale it differently. And then for this, I'm just putting in some general numbers. Maybe the transaction management software per agent's like maybe $50 a month. And then these we'll just keep them at 0. And we'll just assume, well, the bottom part in this deal, there be none because there's no agent for deal type 2 in our current assumption, but you might have numbers in there. We are going to consider these general and administrative. And so with financial modeling, you can either do like, here's all your revenues, here's your cost of goods sold, here's your gross profit, here's your fixed costs, or you can do, here's your revenues, here's your variable costs, here's your contribution margin, here's your fixed cost, here's your net operating income. So what we're going to do is revenues. There's no cost of goods sold for a brokerage in this case, but there's variable and fixed costs. So I'm going to put the variable costs. We'll put deal activity revenues up here, and then so this is going to be variable costs, and then we'll do a contribution margin, and then we'll do fixed costs, and then net operating income or EBITDA. It's basically the same thing in this case. So these percentages will just go into G&A. You could also, so I'm thinking about you might have litigation or insurances, but all those would be covered under your fixed cost somewhere, probably in G&A. So we don't need to account for that in a variable manner. Okay, so variable cost per month per total agents, deal type 1, and then we have all those costs listed there, 1, 2, 3, 4, 5. And we have the same thing, but for type 2. And we have those costs here. Total agent variable costs type 1. We'll just give these a bottom border. And type 2, and then we'll put something like this. Actually, this needs a thick bottom border for revenue. Okay, so variable costs, and we can actually group a lot of this up. So if you wanted to minimize what you're seeing, you can group that. We could group this. So if you wanted to kind of shrink it down, you can see, okay, here's my deal type ones, here's the sell side commissions, buy side commissions, deal type two, here's the sell side commissions, buy side revenues, here's our agent economics. Now let's check this math. So we're saying they're earning 30,000 a month per agent, 146,000 total commissions. So how do we set up this? We did commission split. Oh, brokerage only earning 10% here. So these are really high-end agents because your brokerage is only taking a small cut. Okay, that makes sense. I was wondering why this number was so high right here. So that makes sense. Let's give this a top border. And then this should check the total commission amount as well. Which in this case, do we show the total commission amount? Let's see. Total commissions, yeah. So that would be just for the top side one. Plus this. Why is this off? This should be exactly the same. Total commission 75, 225. Commission share for agent. Oh wait. The sell, this is total commission, but the sell, this is actually the commission amount over here. So sell side commission share, buy side commission share. This is 157. So 112. That. Oh, we are doing agents for deal type 2 in this one. Let's zero that out. This should be 100% for these types. Just so I can check the math here correctly. All right, so 300,000 is total commissions for these deals. And I should be able to back into that with these two brokerage. Actually, no, that's not going to match. Because these contain the two down here as well. All right, let's just put some numbers in here so I can check it for year one. So let's say 90%, and let's say 2. Okay, so now we're saying average agent is earning 12,000 a month. They're getting 156. So total revenues here, this 3015 should match. Total commission for brokerage agent, brokerage agent, brokerage agent, brokerage agent. Okay, so that checks out. So that's correct. Okay, and then what if I just go with total commission share here? Perfect. Okay. I just really want to make sure the commission rates and splits are correct. Because that was very, I mean, this is the whole crux of the model. This has to work right. So, okay, I'm feeling confident that that's good. So these variable costs, all we do is simply look at total agents on, oh shoot, did we not separate it out? Oh no, we do, we did. So total agents here on deal type 1, and then we would just times that by the monthly variable cost per agent right here. Now we also have to check and make sure, first let's lock this actually. We also want to check if, because maybe you're not starting these perks for your agents for a bit for whatever reason. So if this is less than the start month here, zero it out. So there's that cost, there's that transaction. We just drag this all the way down and then sum it up here. Now these are all going to be formatted with no decimal, like this. And let's check this. This is $50. So 55 times 5, 265 roughly. Okay, that's good. Now for agents of deal type 2, drag this down. And then we also want to change it to 125 on this. Sum it up. Okay, and why are we, oh, we put 0 in here. Let's put some numbers in here. Maybe we'll do 1,000 and 250 a month. Okay, that looks good. All right, and then we have total variable costs. Then we have contribution margin, which is like gross profit. So that's these two. We'll give this a thicker top and bottom. And then we have contribution margin for the brokerage, which is total fees for the brokerage minus variable costs. Now I'm not putting on the brokerage side, I'm not counting their total revenue. I probably should. We probably should put that in here just so you can see it. So we'll say, you know, total commissions, then we'll put agents split of commissions. Dang it. Undo of commissions. And then so you can see I wonder if that actually could be classified as a variable cost as well. Either way, the cash flow is going to be the same, but it might be relevant to see, like, here's how much commissions your brokerage is bringing in, and then you got to pay your agents, and then here's your net revenue. Like, is agent split a contra revenue item, or is it a cost? is a question. Or what's the best way to display that? Like in real estate, you have your maximum potential rent, you have your vacancy, and then you have your gross rent. And the vacancy cost is not counted down in fixed expenses or operating expenses. It's just a contra revenue item. I believe this is contra revenue. So let's put total commissions up here out of everything. So it'd be this plus that plus that plus that. So there's total commissions. Then here's the cut of the agents. And that should match our number here, which it does. And then brokerage share, we could add up these, or you can just say this minus that, and it should be this. Oh, no. Okay, hold on, something's wrong. Total commission. Oh, that's the commission, not, but the brokerage itself is not likely on both sides of the deal, so we need to do just the total sell side, and then a split from there between the agent and brokerage. So move all these down one. That would be the max total commission that the brokerage is getting on these deals. Here, they pay the agents this amount, and this is their actual net brokerage revenues. Because you can have net revenues. It doesn't mean net profit or gross profit. It just means your net revenue. Here, in this case, we're paying agents their commission share. Okay, yeah, I think that's more accurate to show what the total commission is, less this split and then net revenue here. And then you take that amount less all these variable costs. So the brokerage is actually bringing in this amount per month. And then they have to operate. So all the operating expenses need to be deducted, which is going to be all of this here, whatever it might be. Okay, so let's check here. So try not to get lost. That, why is 133,000, 143,000 seems high, but let's see. 40, 80. So deal type 2, we have the brokerage earning a ton here, that's why. And we can put this back to 100% now that we did the math, and these can go back to 0. And then here the brokerage is getting a very little amount. And let's say these are a lot less, let's say 2 deals a month for the firm itself. Okay, now let's look. Yep, that looks more accurate. Okay, so there's the monthly contribution margin. And then now we have our fixed expenses. And once we have the monthly detail done and down all the way to cash flow, that's what everything else in the whole model is going to drive off of, is the monthly detail. We'll add in things like, we're going to add one-time startup costs in here as well. We'll add in CapEx, although that might not be super relevant. You're probably going to be paying rent, for offices. So that's all going to be captured in the fixed expenses. But you might have You never know. You might have be buying a building to put in your offices. So there's going to be a CapEx schedule to account for that with depreciation. Um, so that all makes sense. Let's go down here. So fixed expenses, we'll start there. We'll just drag this all the way down. Now we did all the up to there. Let's clear this out. But there'll be a way to also fund with investor money or just your own owner's equity. There'll be options for funding any of the costs with some debt, just for some working capital at the beginning, and the terms on that. I don't want this to be underlined. Okay, so for this general logic for these fixed expenses, what I want to do is say if this date is less than the date here, then 0, otherwise index the monthly amount against the year. And that should be it, and I should be able to drag that all the way down if I lock these. And then let's double check that's less than cost E8. So make sure I lock these right at E19. Okay, that's good. Okay, so now that I have this, I can literally just drag this down through to all of this and over. And that should be accurate. I can clear out the total research and development. Now this is probably not going to be relevant for a brokerage firm, research and development costs, but you can relabel it. If you don't have enough G&A slots here, you can add, just label these as G&A and continue on down with their labels. The point is you just got a lot of slots here for fixed expenses to configure. So we have that. Let's clear out total general and administrative. So notice how I'm doing the formatting and stuff after I have already selected the right positions, because this is just using an index formula that's getting drugged down to make all these references. So once I do that, now I can start making changes, like I can add in, first of all, these are not going to be, we don't need to worry about what these are labeled, but well, we do need those top ones. So like these costs as a function of monthly revenue, which are considered G&A, I need to make spaces here. If I would have done that before I drug that formula down, now I have to kind of mess with the positioning of the index reference, and it can lead to errors. So 1, 2, so we have that here, and I can just drag this down and make sure this reference is right in 109. And this is kind of like a catch-all, just to say, well, these are total, any other expenses directly related to revenue if you weren't able to account for it elsewhere. So it's going to be that total times, and we're going to do net revenues. So where's our net? This one, not the total commissions. So that's great. We have that. Let's just check this. I'll put in like a 10% here just to make sure these are working. Maybe 20% on this. Oh, yep. See, so I didn't lock E49. Good thing I caught that. Let's try this again. Okay, they're staggering from March onward. Wait, this is January. January, February, March. But the activity doesn't start till March. Now, if we were to put this to January, yeah, now you got that, and revenues start January in that case. Perfect. Okay, let's put these back to 0.25. All right, so we've accounted for all these variable costs. We got these, we got all the fixed costs. That should be enough to get you a good idea of what your operations look like. Now what else? So we have, well, now actually we have all the OpEx, all the revenues, so we can say, oh wait, we forgot to put the total for sales and marketing. And remember the total sales and marketing, we did put that this is potentially, where do we put it at? In the variable costs. These are potentially monthly marketing, but they might not be. They might be other costs, and it's just easier to catch all by doing it up here and not, because if it's not marketing and we put it down here, then it's just going to be confusing. But if it is marketing, you could just add it to this total if you're trying to figure out some metric against how much you're spending in marketing. So it's better to keep it separate. Now we can group all of these up here. Just make sure everything's drilled down. Summing up the whole area. Oh, yep, see that's a problem right there, so this should not be going all the way up top there. Let's double check all these. Okay, those are correct. Okay, check these. Looking good. And then total other costs. Now here, why these credit card row doesn't want to format? So let me try and do it. Oh, there we go. Oh no, why is it not formatting? Is it a very small number? Yes, I see. It is. Okay. Let's give these a little indent. And then we'll fix that formula as well. All right. So here, all of these need to be multiplied. How did we lose that formula? So all these need to be multiplied by the revenue, net revenue. Oh, no, 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 no. We put those up top. So clear this. We don't even have this because we put that in this section here. Okay. And then let me just, yeah, that works. Okay. And again, you can minimize here if we just wanted to show, you could almost see the entire deal activity, revenues, variable cost, contribution margin, total expenses without even scrolling nearly. We'll extend these out though. All right, so now we've got all our costs. We put total operating expenses. Gonna be the total of all that plus that's it. And then we'll take our total contribution margin minus that to get EBITDA. Earnings before interest, tax, depreciation, amortization. And so we're probably not going to get down to cash flow today. It's already 11 o'clock. But we nearly finished the monthly detail, which is great. And all I have to do, so the other cash flow items would be debt service, startup costs, CapEx. We actually have to bring in our other statements and stuff, so I'll do that tomorrow. Like the CapEx schedule, income statement, balance sheet, cash flow statement, all that logic I'll bring in tomorrow. Then we'll finish this down to cash flow and just get the model done. I'm very happy with how it's looking. Um, we've got a really good dynamic revenue configuration here. Uh, should be able to scale a real estate brokerage with these assumptions, with the revenue and cost assumptions to, something small for a couple people to something that's got hundreds of people, maybe even thousands, with these assumptions. And you can check out the unit economics. I really think this is an important one here to show, well, based on all my assumptions, what are on average are my broker or agents earning, like this number here. Give that a little bold. This number, and then what's the actual brokerage earning over time. So pretty cool. Yeah, I'll be back tomorrow at 10 a.m. and I might go for a little bit longer tomorrow because I really want to get close to being done with this thing this week, and I'm only streaming today and tomorrow. So anything I don't get done on the stream tomorrow, I'll have to do off stream, which would probably only be maybe some visuals. I don't know. We'll see how long I can go tomorrow for, but we're gonna try and get a lot done. The nice thing is on this, there's not really complexity. The capex is going to be straightforward. Not much depreciation stuff. All the logic is done, which is all these commission splits, like all this stuff, and making sure I've targeted the right rows. That was probably the most difficult to get right. And the rest of this is just a standard model now. So don't forget to check out more models at smarthelping.com. I will be putting this template in the real estate bundle. It's actually the first actual business startup business I've put in the real estate section. The rest of these models are all for like underwriting properties. The assisted living's kind of close to an actual business. It's like hospitality a little bit. You've got some staffing, um, but it's still based on just rent revenue. So I'm excited to add it. I'll put it in the real estate bundle. I'll also add it to the industry specific bundle for $4.99 because it is a real estate brokerage is an industry in itself. So we'll add it to both of those when it's finished. And again, you guys can check out all the templates I've built at smarthelping.com. Lifetime access for $9.99, and that gives you everything I've built to date as well as everything I'll build in the future. Alrighty, take it easy, and I'll see you guys in the morning.